the big voice of the day, and in a note written this morning, the team at HSBC has written a note on Asia Equity Insights, the quarterly piece, and they say that India now appears attractive on a regional basis. We move to overweight from neutral. Herald van der Linde, Head of Equity Strategy at Asia Pacific at HSBC, joins us right now on the show on that note and his view on India. Herald, always good talking to you. Neeraj here, good afternoon. Thank you so much for joining in. I can tell you, a lot of Indian viewers who are watching this and will watch later on in the day are enthused by this. I would love to know what's the key reason. Is it reasonable valuations? Is it a turn on the cycle that you believe, or is it something else?
It's actually a combination of these, but a couple of other factors as well. So India is now more reasonably valued. That's for sure. It has underperformed all the emerging markets. So that's one thing. And we've spoken in the past about some of the concerns that we had about the Indian market. Valuations high, earnings expectations too high. In the past, there was no support from the monetary side, the fiscal side. But now all of that has kind of changed. The GST means there is fiscal support, interest rates are moving lower, valuations are more reasonable. And although I still think there is downside risk to Indian earnings, I think most of the downgrades we see now. I wouldn't talk about an initial recovery so soon yet. But if you look, for example, to the valuations versus the rest of the region, take China, for example, India actually starts to offer value versus China because China has been so strong and India not. So we think this is a good time to move overweight on India.
Okay, Herald, in your note you mentioned that there is reasonable valuation. Is this reasonable relative to the past, or do you believe that the valuations will start to look a lot more reasonable because earnings growth may be around the corner?
Both. I mean, Indian valuations will always be higher for a variety of reasons. Indian companies are more profitable than companies elsewhere in Asia, but also India has got some capital controls. Not everybody can take their money out, so that creates a sort of steam pressure effect on valuations that moves higher. But now you look at, for example, and I think this is a market we need to look at for India, Korea. Look at Korea. Korea is up 40–50% this year. It is done phenomenal. China is up, what is it? Depending on what index you look at, 20–25%. India is, again, depending on what you look at, let's say flat. So there's been a very wide divergence in performance. And that also means that these valuation differences that we worried about in the past, have normalized to a certain extent.
Harold, hi, Mahima also joining in. I wanted to understand, you've said that Indian equities are attractive on a regional level basis. Just want to understand as to what exactly is India, standing out versus the Asian peers, apart from the valuation part that you talked about.
Well, I'm gonna start actually somewhere else with a story that has got nothing to do with India, and that's Korea. Korea has done phenomenally well because of AI this year. So the big story in all the markets globally is artificial intelligence, and people have played that through Taiwan, they've played that through Korea. These markets have rallied massively. Some of these stocks have done phenomenally well. Now what we see is that actually valuations are pretty high there. And people are now hoping that there will be further earnings upgrades. And everybody's positioned there. Hynix is the second most overweight stocks in emerging market portfolios. Most emerging market portfolios are up to the necks in TSMC, a Taiwanese stock. They have on average 10% of their portfolio in that particular stock. So everybody's very well positioned there. And I think they can't really surprise that much further on the upside. And India is almost the opposite of this. Nobody's there for the moment. The valuations look more reasonable. Yes, the earnings will probably be downgraded a little bit further, but not a lot. And maybe as we go into 2026, some of the benefits of the lower interest rates and the fiscal stimulus will support earnings a little bit as well. So I think on a 12-month basis, actually, I prefer to be in India than, for example, in Korea. And that's why we've upgraded. And that's the sort of, putting India in a regional context sort of story that we try to build here.
Okay. In terms of the inflow of global funds in India, what are the trends that you are anticipating for the next 12 months in terms of FI positioning as well? What is the anticipation and trends looking like?
When we start now, what we see globally is that the investor, whoever it may be, is not putting his extra money in the US anymore, but it's putting it in Europe and into Japan. Emerging markets haven't really seen inflows yet. There's talk about it that emerging markets should benefit from a weaker dollar and these sort of things, but we haven't seen the inflow. So the money has gone to the developed markets, Japan and Europe, as I mentioned. What has happened in emerging markets is that people have all skewed into one story. That's the AI story in Korea and Taiwan, as I mentioned earlier on, and have not gone anywhere else. They haven't gone to China. They haven't gone to India either. As now money comes back into emerging markets, that's an assumption I make as we go into maybe 2026 as well. Where are they going to put that money? Well, they've already put everything in one basket, Korea and Taiwan. So the additional money that comes into EM, I think, will go to China and India. And probably for particularly US investors, there will be a much bigger incentive to put into India. The question then is India looking attractive? Now, and this is what I just mentioned. The earnings downgrade cycle is coming to an end. The valuations look more reasonable. The medium-term outlook for growth still looks okay in India. So I think that will then drive that money coming back into your market.
For US investors, would it need the thawing of the relationship between India and the US for the money to come in, even in first quarter FY20 or 2026?
I think ultimately what people look at is simply earnings of companies and these sort of things. So that's what drives it. But of course, there are other factors that determine sentiment as well. That's the relationship between the US and India at the moment, and the sort of tariffs being imposed on Indian products at the moment. I am not overly worried about that. For the earnings that are being generated in India, in the Indian stock market, are predominantly generated in India. So you are not so exposed as a stock market to these tariffs as maybe some other markets have or do so in the past. But so I'm not overly worried about these particular tariffs. It would be good if they come down. I suspect they will come down at some point in time. We'll just have to see. But it's not something that I'm overly worried about. It's a sort of a sentiment issue.
This is interesting simply because, Herald, what you are telling us is that even if the relationship doesn't see a complete thaw, at some point of time, investors might ignore that and look at the earnings growth and the valuations come 2026. And if there was a thawing of the relationship, then that might add some luster, you reckon?
Yeah, I would say so. You see, in the end, if we buy stocks, we buy companies. We don't buy a country. You cannot buy India, right? It's, I mean, it would be very difficult. It would be very expensive. But anyway, but you can't buy India.
It's impossible.
Exactly. You buy a stake in companies. And it depends on how these companies are doing. And then you look at some of the larger companies in India. Where do they make their money? They make their money in India. So as long as the Indian economy is doing okay and these companies can make profits, then I think we'll be fine. It's only a small portion of the Indian market that's really exposed to those particular tariffs. But it's a sentiment thing. So if these tariffs stay, so it is. Here we are. We've priced that in to a certain extent already. If these tariffs come down and the relationship thaws a bit, which I suspect is going to happen, I'm no political analyst, I have no insight into this, but it's just something I suspect, then that would be a sort of added benefit, but it's not something that I hang my hat on or I hang my recommendation on.
And again, not from a perspective of you hanging your recommendation on, but the apparent thawing of the India-China relationship as well, does that have any implications for an equity investor or zero?
Well, I suspect that actually it's the thawing of that India-China relations that makes probably America reconsider what to do in this particular situation. No, I'm not a political analyst. You guys are going to report it, so I'm going to see what you guys are going to say about this. but in a sense, these are political issues that are important for the sentiment of the market, and we'll see how it goes. But ultimately, you just have to step back. What do you buy if you buy stocks? You buy these companies, And what are these companies going to do? Now, they've had a difficult kind of year. Their stocks have come down. The earnings expectations have to come down. But I think, hey, that's probably going to help. The government is really helping on the fiscal side, is helping on the monetary side. Give it a couple of months and things will hopefully start to moving in a good direction again. And then nobody's positioned here. Then everybody will come into India. So we want to be early.
Herald, any particular sector that you're looking at that you're overweight on, or any contrarian theory that you're overweight on right now?
Yeah, so there's a couple of sectors I like. I've always liked actually is the domestic-oriented sectors. So some of the consumer sectors I like the banks, not overly expensive. That's something I would look for as well. Ultimately, if I look for India to buy Indian companies, I like to buy a company that's got a brand or a distribution network in India. So yeah, the banks have that. Some of these consumer names have that. I like the hospitals. That's a great story. Medical tourism is a big story across Asia. I mean, I know friends in Indonesia that fly all the way to Korea to get to get some plastic surgery or some shots and stuff like that. So Korea, India, Singapore, and Malaysia, they are these hubs in medical tourism. And I think, although that's a really small business for some of these hospitals in India at the moment, I suspect that's going to be a growth business over the course of the next couple of years. So that's hospitals is something I would look for as well.
We've seen a lot of government policies in favor of consumption boosting, right? We've seen tax cuts, we've seen GST 2.0 coming in. All of this considered together, do you think this is just a near-term push, or this can actually structurally change and lift the demand in the consumption space from a 2-year perspective or a 3-year perspective?
Well, actually, for a structural change in consumption, you need employment. I mean, it's very nice if somebody gives you $100 and you can spend it tonight on a couple of beers or something like that, or whatever you like, right? But for you to say, I'm going to spend more, you want a job and you have prospects that the job stays and you have a good salary and these sort of things. So insofar, these fiscal stimulus help job creation, get people that and confidence, then I think this could be good for consumption. That's right. And the thing is also, if it doesn't work, the government clearly wants this to work. But if it doesn't work, then the government has to say, okay, what we've done so far doesn't help. Now let's do a little bit more. So they will respond to this. What they want is to provide that employment, to provide that growth. And I think that's the important thing now. We have the government going in that direction, and your central bank is trying to cut interest rates as well to support this as well. So there's two sort of pro-growth stories unfolding in India. That's quite positive.
Herald van der Linde, lovely talking to you this afternoon. Thank you so much for taking the time out and being with us.